All right, guys, well, let's kick this thing off. Looks like we got lots of people trickling in. So, hey, everybody, good to see you. A couple of quick updates on some things before I introduce these awfully wonderful people. I want to kick off with a big thanks to our sponsors, Bankers Helping Bankers and BaaS Association. And as everybody knows, sponsors make everything possible. And I think, we've already talked a little bit today, guys, as we were chatting here before. A lot of these folks are actually really imperative in the ecosystem, and we all work and partner and solve problems and everything together. So not just sponsors of everything that we do, but important components to the infrastructure. So thanks to our sponsors. As always, I have some cool updated numbers for everybody too. So we're up to 660 fintechs, brands, however you want to look at them, that are sponsored by a bank. And we're up to 149 sponsor banks, right? And that's everything from deposit side, lending side, could be secured credit, debit cards, credit cards, everything else. And I wanted to throw out a new one this time. We're up to 140 direct banks. And the way that we define a direct bank is, let's just say if a chartered institution launched their own fintech, right? And if you kind of think about the infrastructure required, and I know Walt and Steve will kind of chuckle at this, it's very similar, right? Whether you're launching your own internal brand at your institution or you're sponsoring, an existing, it could be a 25-year-old company or it could be a brand new little fintech company, whatever you're trying to sponsor a chartered feature for, the ownership structure is not terribly important these days for everything we're talking about. So funny enough, Walt, if you added that 140
Yeah,
direct links to the 149, you're getting to a pretty close to 300, right? And
right.
so would make up, you'd be knocking on the door of what, 25 plus percent,
Hmm.
pushing 30% of the commercial banks, right? And a lot of that is commercial community banks. We're at 17% of the commercial community banks that have at least one live sponsored relationship. So in small business and community banking, I think I want to set the tone today for everybody of saying, forget the headlines and all the bad stuff we've heard. This is very much mainstream, and also the numbers are humming and flying. Granted, a little more quiet these days, but going faster than I've ever seen it ever before, right? And so we are past the early adopter and we're getting into mainstream, and it's pretty cool. I want to introduce these guys from NXTMOVES. Seriously good friends of mine. I've known, shoot, you guys for maybe not your whole lives, but mostly my whole life. Yeah, man, like big brothers. So I've known Walt since his Jack Henry days. And for everybody out there, if you connect via third-party integration to your core, that's pretty much what Walt was brought in to build out at Jack Henry back in the day. A lot of that side of the world and that sort of partnership program of bringing in third-party fintechs to work with the core. So core integration specialist in a big way, and then onto the payments world. And I'm not even going to touch that one. I'll let you get into that one in a minute. And then Steve, I've known since earliest days of Malazai for me, and he was a co-founder over at Gzio, and that was pretty cool. We got to work a lot together and partnerships, tons and tons of customers in common, fighting fires and building cool stuff and everything else. So Steve's a good friend, a mentor of mine, and appreciate you guys being here with us. Why don't you guys give a little intro and tell everybody what we're going to talk about today?
Absolutely. Dave Tanner, thanks so much. We appreciate it being here and being able to kind of just, rap about a little bit of what's going on in our industry and have some fun, obviously, on this call today and kind of just to get together. So, Walt Hoffmann, co-founder of NXTMOVES, as Tanner was saying, I always joke and say that 20 years ago, when I was a Cabbage Patch Kid, I started at Jack Henry. Don't let the beard and the gray fool you, but enjoyed my time at Jack Henry. Got to learn obviously a lot, especially at the ground floor. When you think about 20 years ago, almost now, is integration was almost a foreign language. People didn't hear about that kind of stuff, well, let alone if you thought about real time. But really blessed with the time that I got to have there. Got to delve into things like building credit bureaus and credit reports, as well as a bunch of lending stuff. But Tanner, as you kind of shared more recently, was able to really spend the last, I would say, 5, 7 years around payments. got a college education, if you will, every single day at the last organization which I was at, which is Move Financial. Good friends, obviously, with the team here. And Steve and I started NXTMOVES 3 years ago, almost 3 years ago now, to try to do something a little bit different and kind of get towards community banks. So appreciate it being here, and Steve hit it.
Yeah, Steve Nigri, co-founder of NXTMOVES, and happy to be here, and just appreciate the Mayos and Fed Fizz and Bankers Helping Bankers, and all you do for the community, and all, and working with your vendors and people like us. So really proud to be on the webinar. My history is goes back to the GZO days of digital banking and grinding in the days of Malazai, and introducing banks into mobile, and that mobile was going to be the future experience. And then from there, GZO exited to Jack Henry, and then from Jack Henry went to Bill Go deep into payments, issuing bill payments. Really got to really learn the beginning stages of everything you need to do for issuing to create and live in the payment world and payment rails. Sat on the Faster Payments Council, FDX. It was a really great experience. And then went to Move Financial, which I'm sure many of you are familiar with. And was the ninth employee there and helped build that up from the ground up, and really got to live in a low-lying infrastructure of all things payments, from acquiring to issuing to RTP to FedNow, and the ecosystem of how all that works and applies. And then Walt and I found a niche that we thought was going to be what the future of where issuing could be for banks, and wanted to focus on building a company that was bank centric toward the issuing view, and look forward to talking through what we think the future of BaaS can be, and where it's going, and how we'd like to play in that world as well.
Love it. Dad, do you want to say anything there on I'm thinking about, to his point of what does the future of all this look like? And I mean, I think we all have some of us have a little bit of a different view of the past maybe, but where things have come from, where they've been going to. And I think looking forward, in this whole space, certainly right now, it's really easy to take a quick view of a moment in time, or a specific institution, a piece of infrastructure, a brand, and just look at it and pick it apart. But when you look at the whole thing over a period of time, there's an ebb and flow a little different. And I would just want to give you a chance to touch on, give us the old wisdom, man, as you sometimes.
Yeah, man, I'll tell you what, you watch a lot for a long time, and things are all, I don't care where you're at in the process. You think you're at the tip of it, and you think things have really evolved, and they're evolving quickly, and can't wait to see what the future brings. That's a true statement in 1980, 90. You mean, just on and on. And here we are again, right at that same spot. And one of the things I want everybody to really grasp is what you said in the beginning. And I think I've worn my vocal cords completely out trying to talk to people about, I don't care what you want to call it. Let's just call it the new era of banking, whether that's BaaS, embedded, direct banks. All of this is the same thing. And it's the movement of money that's going in different places than it used to go. Debt facilitation, all the other specialty financing things, what's going on with merchants and all this. And we've been just begging people to understand that this is not a time to do the same old, right? It's really important that you engage in what's happening right now. And I think a lot of the numbers that we have, and I'm not sure how much of those you plan on sharing today, but it's astounding how much that's happening and at the pace that it's happening at. And I would also encourage everybody to take everything you read and throw it out the window, because everybody that I mean, I don't know anybody that didn't go into this that didn't feel some pain along the way. But at the same time, looking back on it, every single one would tell you it was worth it. It was a smart place for them to be. It's the growth of the future in banking. And if you're in it, you're in it all the way. And if you're not going to make it. They're going to outpace you unless you're really, really, really big. That's the only thing that can save you is scale.
I have a stat for you. We should script sometime, right? Because we couldn't do as good as you sometimes just soft toss me. So thank you. I just pulled this
on that meeting.
I was gonna use it. Yeah, the marketing team's going to kill me, but I'm going to share a really cool one I've been working on. So I've just been looking at App Store downloads. right? As just, I'm not saying it's a perfect way to measure things, but it is one that's standard across all of us, right? And so looking at App Store downloads and year over year growth, I'm looking at all of those 660 fintech brands. And then I broke it out against all banks, regionals, community banks, et cetera. And here's a shocking stat. So as far as the growth and number of downloads goes over the last 12 months, 3% growth in number of downloads for below 10 billion community banks.
Nice.
50% growth in fintechs, brands, retailers. Yeah, 3% versus 50. And
No.
so I think that kind of backs up your point there, Dad, of those that are in it, want to figure out how do we, play deeper and more into that market. And also, if you look at the profitability of those institutions, it's certainly there, right? So fintech's the new de novo, or I think we're maybe getting past that word, guys. I know you guys look at fintech as a little bit more infrastructure than brands, right? And so we'll touch on some of that. Steve, I wanted to kick you off though, man, with a question. So first off, maybe touch a bit on some of the different ways that you view everything, but then maybe just tackle the question of like, what does the right way look like? What's the scalable and good way to do things? I know we've talked a lot about the operations side, best practices and things like that, but you want to kind of touch on that a little bit?
Yeah, I think one of the things that we really wanted to focus on, and we've done a tremendous amount of research and talking to different banks, is that the problem is right, you're never going to get the guidance from the regulators. They don't tell you exactly what to do, but they like to come in and tell you maybe what you're doing wrong. So if you're just waiting on guidance, it's hard. That's not how they work. But what you do have to do is look at what your predecessors have done. So where did they go wrong? Maybe what they didn't look at or what they didn't think about. And we were on a phone call today, and one of the things that I think the place to start is making sure that you have everyone in the bank that matters involved in that. So you need to have your risk team on board with what you're doing. You need to have your compliance team on board with what you're doing, not just the technology or the innovation team. And a lot of what happened in the past with BaaS was that it was the innovation team out there running and doing things and putting things in place for going after new net income margin and better deposit, lower deposits and greater value there. But when you speak of like what to do, is one of the things that we've really learned is the banks that we work with is getting that team on board from top to bottom so that they know this is an initiative from the bank and this is where we're going in the future. Because so many banks that are out there cannot just survive off the community that's there. And that's really what the fintechs are showing us, right? They don't live in just a geographic area that they have. And so when you're seeing their success is because they're able to go after the market. And whether you're in Arkansas or Southern Georgia, you still can go after that market. And there's ways to work with either fintechs in your marketplace, or there's just ways to work with your local and modern businesses that you're going after. But we think one of the ways to start there is just first thinking about it and getting your team thinking that traditional banking doesn't have to be BaaS and look different. And there's a lot that you can do with traditional commercial lending that just starts with going after what people call BaaS. And a lot of that just starts with lending. And we talk to banks all the time about is like, what are you really good at? And you should be lending. If you're a bank that survived and been around for a long time, then you understand lending. You understand risk analysis of loans. And a lot of that is where it starts. So it's not that you're taking on something so different than banking. You're taking on, as Dave said, it's just the advancement or the modernization of where banking's going. And I think a lot of people just think that BaaS, or however you want to say it, sponsor banking or special purpose lending is something that's so new to you. It's not so foreign to you as you think it is. It's really just based off what you've done for years within your institution and what most of you have done really well. Because if you're surviving and thinking about going forward, then lending has been where you've lived off of and grown from. And you don't have to just think that you're taking on something that you don't know. You're taking on a new vehicle of what you don't know, but it's just like if you go in and used to drive a car your whole life, if you start driving a truck, it's a little different, but you're still keeping to the rules of the road. You're still, need to make sure that, you're following what's going on out there, but you might sit up a little higher. You might have a little bit of different view. You might have to think of things a little bit differently, but you're not changing the essence of what you're doing. You're still driving the car toward banking and all the things that bring in revenue or, margins toward the bank.
Yeah, it's still banking, right? I mean, I kind of chuckle at a lot of this. I've mentioned to everybody before that I really believe we're just kind of, we've been working on what is the future of commercial banking looking like, right? And even small business, I think. And how do we engage and what are those needs? And something, Walt, I'm going to steal your thunder, but he uses this term modern business, right? And it's really cool because you get to thinking about if I'm a small business, maybe I'm a plumber or an electrician, or maybe I'm Uber, right? I mean, anywhere in between. What are the things that I'm going to try to do to modernize and where can I grow revenue and actually starting to think about stickiness, wallet share, et cetera. And I really think a lot about the lifestyle brands. I mean, that could be a church, that could be Harley Davidson, that could be a gas station. I mean, you name it, right? And so as you kind of look at your commercial customer list and portfolio, I've come this full circle and really from talking a lot with you guys, but those 660 that are currently being sponsored and very, very profitable, those were somebody's commercial clients before that they were working with these 149 sponsored banks, right? And so there is a heck of a transition going on there and it's really coming full circle.
Let me say something real quick. The number one thing, I've said this a bunch of times, number one thing I get from a banker every time is if I go do this, how do I find a fintech, right? Okay, so Stephen Walt, what would be your number one question? Wouldn't it be just the opposite? Where do I find a bank that's willing to take on this program, right?
Absolutely.
And that's it, guys. You've got gazillions of dollars sitting in the middle, waiting on you.
Yeah, I mean, let's take that a step further. So Steve and I work with the card brand networks, and one of the things that all three networks have told us repeatedly over and over again, especially for the last 18, 24 months, is it's not just fintechs that are going to the card brands and saying, hey, I want to build the widget. And the widget could be a debit card program, or it could be a consumer credit card program because they're a big online merchant retailer, right, who does a lot of business, $1 billion. They've been in to the point you made, Tanner, about being modern. They've been around for 25 years, so they're proven, right, and they're growing. They're meeting their customers online and where they want to shop, as an example. So they've kind of got past brick and mortar as a traditional and going forward into the future. And they're like, hey, I want to build a card program. Great. The first thing that comes up back from the networks is, which bank are we going to place this at? Who's got the bandwidth and who's got the ability to get it off the ground? The short answer is there's not enough banks, even though there's the ones that are out there that are pushing as much as they can and have adopted and embraced sponsorship. There's not enough banks. We still need more. And the card brands are saying this from their own mouths. They need more banks to participate. And so, it can be a modern business. It can be a fintech that's coming out there and saying they want to build something, but banks are right in the right prime position, I would say, to kind of almost maybe cherry pick based on growing and how they want to grow. They can cherry pick. They can be maybe a little bit more conservative in how they take their approach and finding that maybe home run or even a single if you're kind of trying to do that first and maybe do baby steps. But it's out there. The business is absolutely out there. It's busting at the seams.
Yeah, I'd like to double down on that. I mean, I think one of the things is, we talk about modern, but it's just a modernization of businesses, whether they've been in your town for 5 years or they've been there for 25. They have to make sure their business is constantly adapting to what's going on with the movement of, commercialization in the marketplace. And so it doesn't matter that if you're in a small town or you're in a little bit of a bigger one, you have to still keep up with your competitors in business, and they're always moving forward. And if many of you look in, your small towns now, you're probably seeing that there's a Wells, there's a Chase, there's bigger banks that weren't there 10 years ago. And there's a reason they're there, because there's business. And so we talk to our banks all the time about, if you don't necessarily have to go out and figure out, like, how am I going to go after all these new clients I don't know about, or how am I going to get them? Just dig into your current client base, and I guarantee you'll see that they're looking for all kinds of different business that they didn't know they could even talk about with you, or didn't even think about. And they're talking to some other bank or talking to some fintech about some sort of loan type or something, because they're thinking that you only do this traditional way, and I don't need a loan on my building, and I don't need a mortgage, so my community bank can't support me. When if you go out and start talking to just the clients that you have today, you'd realize there's a wealth of business within those clients, and they're going other places because they're not aware that you can help them in so many ways. And fundamentally, as a small business owner and somebody who's been around small businesses, you don't get that attention from the top 20 banks. The top 20 banks will give you a credit card and they'll sign you, but they don't know you. And you guys still have the fundamental ways of what community banking was built off of, and it's that relationship. I mean, Walt and I are extremely close to our community bank, that where we keep our business accounts, and these guys treat us like gold, and we're constantly trying to figure out how to do deals with them and work with them. And they don't have to do that, but it's the nature of what a good community banks do. And so you're just doing the fundamental things. I really like, my emphasis is that to think about that, you're great at relationships. You have these customers, dig in and double down on the customers you have and start there. You don't have to necessarily go hire 5 people and figure out how you're going to go after the entire marketplace. Start and get good within your own community and then build from there.
Yeah. Yeah, there's something just, I'm going to say it. I don't care. It's just bouncing around in my head as you were talking, man. And it's like, if somebody else, because there's so much great infrastructure at all of these rock star banks today, if somebody isn't coming after your commercial customers, it's because they don't want them. Right? That's scary, right? That shows you the nature of where the capabilities have gotten to, and that's where we all need to be at. And likewise, I'm starting to see a lot of sponsor banks cherry picking top commercial clients from non-sponsor banks, right? We can use whatever words everybody wants to, right? I think embedded finance is probably the fun term of the day, but it's interesting to watch that. And I think you guys are putting it in a good lens of, this isn't how do we go work in fintech land. This is how do we work our own commercial customer portfolio, right? And well, I wanted to touch with you. I had a note here from the merchant side, right? So, and by the way, anybody wants to drop a question, I've already got a few in the questions. I'll rattle these off as they come along, but just drop them in the Q&A section. Well, what is a merchant or commercial customer, on the average, what are they looking for that the average institution isn't offering today? What's the top 3 list? How about that?
Yeah. So I think, not trying to go ahead and put a damper on it, but, I think what people wanted, merchants wanted for a very long time, was that their local bank was able to offer them card processing and services that help, obviously, the way that they take money in, right? How am I going to actually take, it's not just cash game, obviously, we've gone away from that, but how am I going to swipe a card? How am I going to dip a chip? How am I going to go ahead and maybe do online transfers of some sort to be able to take payments inbound when ACH is inbound? And is there a business related tool that helps me do that? And I think the market's kind of said what they want. We saw what happened with the likes of Stripe, Square, and maybe a mass exodus, unfortunately, of smaller businesses that lost, that banks lost because of just that simple, maybe convenience, if you want to put it, right? But its reality is they were able to poach on a prime market. But I think going forward, the better way to look at this now is, okay, where are the deposits coming in? How am I giving my payments as a business, right? Maybe you're not the merchant account of record for settlement, but hey, that business still needs to operate. And what are their expenses looking like? I think it's lending, right? And it's, most banks say, hey, SPVs, and I'm really good with CRE, commercial real estate lending, and that's kind of my shtick. Okay, perfect. But there's ways for you to be looking at, okay, what is that my small business that I'm banking right now? Do I be able to see their receivables that are coming in? Do I need to look at their payables as well? Can I give them small advances on just to help them with cash, cash flow over the course of the next month? Is it something that is, hey, I want to grow as a small business, right? I'm a manufacturer in a small town. I employ 20, 30 people in this town, and I want to get my widget, so to speak, out into another marketplace. Can I do that? And so specialized lending and having just the open ear, I think, is really, really important. And then I think lastly, it's going to be maybe some technology, right? Is how do I extend now? If I know, merchant services are coming in, I'm able to see that, and represent it inside of my online presence and technology. I'm able to go ahead and do specialized lending really at the fingertips of where I meet my customer. I think the next thing is maybe technology. And why I say technology is because what we're looking at right now is, a handheld device, what is your cell phone. You can power everything through mobile banking now, so to speak. There's 27 different versions of what mobile banking is represented as, right? And whether that's through analytics and I'm putting it on my phone and handheld, and or if it's through a better, wireless type of terminal, so I can go ahead and collect payments, whatever that is, people need that to be able to kind of function faster. And it's all based on, principally, it's all based on payments and what I'm doing with my business. But going forward, it's how that business is able to kind of react and get it out to the marketplace faster.
And I would double down a little bit on that too. Is it's product grouping is product grouping is not all in technology. Maybe you want to offer a commercial card that other people are not giving as much cash back, or maybe that you could create that has a little bit more advantage. And you can do that if you work with, there's vendors out there that can help you build commercial cards that are not just what everybody else has. Because if you just have, what everybody else has, you have your relationship. If you put a little bit better product in your hand, then you got something to really go talk to your customers about. When you think about the banks and the customers that they have, fintechs don't have customers. That's their biggest problem. Trust me. This is my fourth one. I'm telling you, going to find customers is hard. You guys have the customers, and you have to take advantage of having that customer base. It is something. So talk to them. What is it that they want? And then the banks that we've seen that are not even doing, I would say, traditional sponsor banking. They're just doing unique lending, or they're offering a really cool commercial card. They're not just doing a check the box from my core. This is what they offer, and it offers really nothing, and we don't get anything back from it. You don't necessarily want anything back from the card. Maybe that's not your revenue source, but that's the reason that you get money put in your accounts all the time. That's the reason you get deposits, because they're running that card with you. So not every product is necessarily what you're going to make your NIM on, but it is part of the function of keeping the engagement with them. The same thing we used to do in digital banking was, how can we keep them engaged, right? PFM was for better engagement, better digital tools, better mobile was for engagement. Engaging them is also like, how can you build a product that might even just be centered around accounting and make their accounting or their treasury a little bit easier? But you don't necessarily just have to solve everything for them, but just start solving a couple pieces for them, and then you'll realize, and they'll come tell you what they need. So reinvesting back to your clients and understanding what they need. It doesn't always have to be around technology. It can be around a really good card product, a really good banking product. And that doesn't mean you have to be a full-on issuing bank. There's plenty of ways to become use an affiliate to get what you need, as many of you would use. Like many of you use, regional ACH houses, and along those lines, you can do the same thing and build the right card program for you. What you need to focus on is fighting for what your customers need. And another thing is a lot of those banks who do this well really focus on, getting a niche in there of what they're going to be really good at. And then they start attracting customers from other banks and things like that, because they found like, this is what we're going to be really good at, and this is what we're going to live and breathe on, versus, trying to be a jack of all things, then you just really don't satisfy anybody. And it's hard at a small community level to do it all, because you're not going to have the bandwidth to do it all well.
So let me ask you a question here. You guys get pounded by people all the time, wanting to set up a program, do different things that they want to do. You can specialize that better than anybody I know. You can monitor and meter how this stuff works, so certain things don't get turned on, certain things are turned on in certain areas, all kinds of nifty little things that you do. And you have all these different people coming to you wanting to set these things up, and then you turn to the banking community and go, okay, I need banks. And what this means, guys, is that companies like yours are bringing leads to the banks. The banks just have to say yes and get in the game. Okay, so what's the steps that go into that? They'll go through a due diligence process with you, and let's say that takes X amount of time, right? Once they're happy, then we're going to launch our first little program and make sure that's cool and compliant. And then once we're at that point, okay, each time you bring them a new one, it's still multiple weeks, multiple whatever. The process right now that we have is built around go as slow as humanly possible, right? It's not built around speed. And so something I've been talking to bankers about is, even if this isn't your game yet, contact somebody like you or whoever it is that they prefer and get this due diligence piece started. And so that you're in a position to where, here's what's going to happen, y'all. You're going to get a phone call that's going to say, got a hot one. This is a really good opportunity, but we need to move between this, 45 days or whatever it is.
But 45 hours.
Yeah. And if you're not ready to make that decision today, maybe by tomorrow at lunch, your ass got left. Somebody else picked it up, so I'll take it. Okay. Because there's 150 players in it already that are going, yeah, I'll take everything, man. Let's go. This is a great idea. You've got to get your bank in a position to where you can move with speed and with confidence that everything you're doing is compliant and good. Now, if you guys could explain a little bit to everybody, what the hell is it that you're doing that would make me as a banker go, hell yeah, I'll go fast with you, man. I mean, how do you bring me these clients? How do you do what you do?
That probably ties into the program management old days as well, guys. So yeah, swing by.
No, I think there's a cool story that just happened over the last, and this happens a bunch to us, but we literally, a really small bank. And I was concerned about, but they're like, look, we want to try new things. We want to look at new lending opportunities. We want to eventually get into doing cards. And, do you know, is there any accounts that you're working with that can do that? So, there's a fintech that we're working with that really just needs to start out. And the first thing they're going to do is just start out with some special lending. And they're basically just moving special lending. So one of the things that we have focused on is, as we build a bank-centric view to what we do, is we really got back and focused on underwriting. And that's really where we feel that, a lot of legacy BaaS went wrong, was that they got away from traditional underwriting, which is one-to-one. And so the deals that we bring to our banks always line up as a one-to-one underwriting so that they can do lending the way they're used to doing lending, and they don't have to get away or try to explain to regulators or even their CFO of why we're doing this, or more or less the compliance and risk officer of like, we're doing something that, we're going to lend off what they think. No, you're going to lend off what you think. But back to that point is this bank was too small or not ready to start issuing. They will be doing issuing maybe in a year and a half from now. But because they were open to the idea, we were able to bring them a lending opportunity that's about $1 million to $2 million a month. And they're doing it on traditional commercial lending. And so they picked up a lending deal just because they were open to the idea of being able to say, hey, I want to look at things differently. I want to look at special lending opportunities. And I know that someday I want to get into issuing because it's really just another form of how I'm going to do commercial lending in the future. And so I think that openness to that got this bank, $24 million a year in lending from one client, which is pretty great. And they're a bank that's under 200 million. So.
I mean, if you look at where the opportunity kind of lies, and I would say there's baby steps and crawl, walk, run, right? Hey, I want to be a BIN sponsor. That's a big statement. No one can just all of a sudden become a BIN sponsor overnight. There is obviously a process. But if you want to dip your toes in that pond, your peer banks around you that are BIN sponsors can help you build affiliate programs, right? And that's what helps you kind of test that out independently of your core. It lets you really understand the business itself and helps your institution kind of do some prep work for, oh, this is a big regulatory lift and I need some compliance oversight. I need to have a better operating manual of how I'm going to do this. In program management, we help you do that as well. But the reality is banks have to learn it. You can't just expect them to do it overnight. That's okay. You can be a lender of record, right? So I've got a great decision engine and modern technology that I can maybe lend out to a BIN sponsor that has done debit cards, but they had never done credit. But I've got great lending facilities or vehicles, right? So I can figure out how to help them out and be a lender of record and kind of help and participate, if you will, in a program. Or I have none of those things, but I am sitting on capital that's not being put to work. Maybe I know that one of my peer banks that is a BIN sponsor that's getting this big mega online merchant retailer that wants to build a credit card and it's going to be $1 billion, whatever that may be. I want to be able to throw some capital towards that in participation that's going to be creating an SPV, and I'll get a nice little return on it. Well, banks don't necessarily have certain protections, let's just say, that other types of institutions may have. The reality is that banks can still go ahead and work together and learn from each other. And I think there's now, Tanner, to your point about, roughly 17% of banks are sponsors. There's enough peers out there to help you educate your own staff, and hell, there's a bunch of vendors and consultants out there that you can talk to as well. But you can learn this pretty quickly. It's a matter of making the decision of where's my threshold for not pain, but for learning, right? And then how do I take that next step? Is my team ready to take that next step?
There's
We've been building out, just to jump on that too, is like we've been building out a network of banks. We have a deal going right now where we worked with 3 banks to pull off the deal and to make the deal effective. And so we just keep trying to get banks into our network that to say, hey, listen, going back to what you said, Dave, is like, these leads don't come, you just don't go out there and say they're going to be there. It's like, you have to like throw your hat in the game to say, hey, I'd be open to these leads and that they come in. And so being part of that network allowed us to say, hey, these 3 banks line up well for working together. They have the same viewpoint of how they want to go after their markets. They sit in different parts of the country, but how can we get these 3 banks to work together? Because of their size, they can take on a much larger deal together than they would if they just went after it one-on-one. Because if you're just going after sometimes deals that it's a new startup or it's a new fintech, that's hard, and we know the ratios is that they don't usually work out. But if you go after bigger deals, that modern businesses that have been around 20, 15 years, those guys are trying to do products like fintechs. They're just not talking to community banks because they don't think community banks have that interest. And the last 3 deals Walt and I have worked on, each of those businesses have been around for 10 years plus. And let me tell you how exciting the compliance and risk people get when you bring in a 10-year-old business versus trying to talk to them about a startup. So you don't have to necessarily, go and say, well, we're new to this, so all we can work with is a startup, and try to walk them through. So I think, working together and working apart is like, you can find partner banks that can really join together. And that's where companies like us can help you bridge that gap a little bit, because we believe in that too. It's a cooperative to get this going for a bigger play, and a play that, once again, a 10-year-old company has customers, so they're not going to fight for customers. They're trying to figure out product fit for the customers they already have, because if they fit the product right, they already got the business. And that's a much easier sale to your board. It's a much easier sale to your entire team, why you're doing this, and at least of what we've seen from the banks that we're partnering with.
Mm-hmm.
great call out. I've talked before about kind of this exodus I've experienced just in my career of our community banking technologist people that are now in, crypto or fintech or these other areas, right? And I mean, you guys are the like true blood community banking, true believers that are still building cool stuff with community banks in mind. I just tip of the hat, boys. I'm getting hammered with questions, but I do have one, Walt, and I just check with both of you guys real quick and tell me if this is a true statement, because I've thought a lot about this, and every time I talk to you guys and a handful of others, it's just a feeling right now that there's a wave. Walt calls them modern businesses, but you guys are running into opportunities that, look, when I put my bank hat on, it's like, I'll take it, I'll take it, I'll take it, right? You guys are running into a wall of opportunities for commercial customers or merchants. I mean, daily, you guys are running into things that are damn interesting, and quite a few that are like whales. Does it feel to you guys like, I don't know, the last 6 months is just something's different, something shifted, everybody's heading in this direction? We can call it embedded finance, whatever you want. But if I'm sitting here as a banker, should I be worried and or excited that this is a big shift for merchant customer needs?
I mean,
I want to jump on this one.
Everybody's laughing.
All right.
Okay.
Walt and I always fight over this, is that so we've been doing this long enough that I joke around, is like, we've been in this game since they actually just called it financial technology, and you had to build a product that just beat up on the 3 cores or 5 cores out there, and they would come by you, right? That's how financial technology back in the day. You can argue with me or send me emails or whatever, hit me on LinkedIn, but back in the day it was called financial technology, and we were these weird digital providers out there. And now it's fintech. But one thing in fintech, and the VCs are involved, and it's got bigger, and companies companies like Move and all those out there, is that it's also trained the market to think differently and to think that like, hey, this is what financial business looks like. This is how I need to do it. And they see these companies that have got into financial service arenas and had great success. So the cat's out of the bag. It's not just like you have to be in fintech to think like, hey, I can make money for that. Walt and I had a association that's been around for over 50 years that has 5 million members that's looking to create lending opportunities for their members of them. So they want to get into the lending business. So it's not just Rocket Mortgage coming at you. It's all kinds of people thinking like, I'm going to get as close to banking as I can, because the companies I look out there getting close to banking, Chime, Circle, all these things, they're doing pretty well for themselves. So you might want to get into, you might want to be in that arena. So I think the market has been educated now, and that it's not about having to educate the market. It's about getting yourself in an arena that you can get these opportunities to come your way.
Yeah.
It's a beat 'em or join 'em moment, right? I love it.
Yeah. And as far as the ones that are joining in, if you look at maybe, okay, I would say with the exception of a couple, maybe three really bad apples on let's just say consent orders and things that have happened in the market over the last few years. If you talk to another banker out of maybe those three, I'm not going to say who they are, but out of those three, if you talk to the other ones who have gotten consent orders, they're wearing it as a badge of honor. And they're not doing that because they're trying to be showboats or anything else. They've gone through it and they're still going to go after it. And they're addressing things with regulators, either the state and OCC level. They're addressing things with the Fed, but they're still going after sponsoring. They're not going to stop. And the reason why they're not going to stop is because it does make sense if you're doing it right. So I think there is maybe some pent up need and demand. Tanner, back to your question, right? 6 months. I think there's some pent up need and demand. And I think people are looking at it from maybe a new lens or new light, which is, how do I go ahead and do this in a way that makes a lot of sense for me as a bank to manage the relationship directly? I'm not going to manage it through someone who promises to go ahead and give me all the things that I need. I'm going to do it myself. But then how do I make it maybe the whiz bang? And that whiz bang might not come organically from the bank's technology team, but it might be coming from that partnership that you're doing with that modern business, or maybe even that fintech, to kind of get you out there more and to spread your name. And I think there's a lot of need. There's a lot of need right now for that. And it's not just the Fortune 100 list. It's everyone in between. It's all kinds of businesses that need to go ahead and get themselves digital or out there and build new things to meet their clients. Be a part of that. It's so much right now.
And if you look at some of those guys that got in trouble too, it wasn't because they were looking at new and innovative ways to do banking. It was more when they got there, they did some traditional banking things that are banking 101 that, they kind of push the points on. So if you stick to the fundamentals of banking, you don't see those guys getting in trouble. And there's a lot more people doing this than you think too. I mean, there are some banks out there that don't claim that they do sponsor banking that we found just one the other day that I couldn't even believe the amount of business that they're doing on it. So not everybody's out there telling everybody about it either, but
It's the quiet riot right now, man. Yeah.
Yeah, there's people that get consent orders and and it's 4 pages, 8 pages, and then there's the one that's 44 pages, right? And to your point, there's people that did things. I don't care what era of banking you were in, it was wrong. Everybody knew it was wrong. It was wrong. Okay. Now, that said, throwing the baby out with the bathwater has never in a progressive technology era been a good idea. That's how you get your ass kicked. Now I believe this internet thing, to me, it's like, hocus pocus. I don't think I'll ever get off the ground. You get your ass kicked every time in that line of thinking. But yet you watch somebody go out there and they hook a car battery up to their wife's, clothesline. It's like shock the hell out of her. And it's like, I don't know why I didn't think of that. And it's like, that was never going to be a good idea. That was always going to be a bad. Nobody told you to hook the car battery to the clothesline.
Especially at my house.
Exactly, right? So there's dumb things that we see, but they get amplified because they're dumb and because they're bad. And then that becomes a smoke signal for everybody else to not touch this thing. And that's the part that I think I've watched when I thought, man, this really is going to be damaging for people trying to lean into it. To your point, they continued to lean into it quietly. And I think now with this thing you're talking about in the last 6 months, Tanner and Walt, Yeah, the gloves are off. People don't give a shit anymore. We got a new president. We got a new era. We got a new everything. CFPB's not all over us anymore. And people are saying, look, not only that, but the right way to do things is not that hard to find anymore. It used to be we'd have to go through things like, connectors, and it's like we were ledgering things off the bank. I mean, lots of crazy shit going on that doesn't really happen anymore to the extent that it did. And if you want to figure out how to do things the right way, it's not even difficult to figure it out anymore.
Well, I mean, in the gold rush that I would say better than ever right now, but in the earliest days of this gold rush, it's like we in banking just decided we didn't need to do reconciliation anymore. Like, come on, I mean, this is obvious stuff. I want to hit at least knock out some of these questions. You guys are popular as shit. I'm getting bombarded over here. So first off, you got a compliment. So coined new term, embedded participations. So I thought that was great, and you got some praise on that. I'm going to squish a couple of questions, everybody, into what I think is a bigger topic that we can dig into. So think stablecoin, think future of payments, and think, I know you guys have fielded this one recently as much as I have. I must have missed the scary article, but the end of the payment networks and how crypto and stablecoin is going to rip everything to shreds and all that. And just my 2 cents, Steve, I'm gonna pick on you first because I kind of stole that rules concept from you. We had a discussion about that when you guys were down, and I see so much from, I think, all of our perspective that a bank probably wouldn't see, a fintech, a brand, a merchant wouldn't see. Everybody has a different viewpoint of the networks, right? And how do we interact? What's the payments flow look like? What happens if this, then that, right? And so, Steve, you want to kind of touch on the rules? You've talked about that before as such an important part of, the payments networks versus, hey, it's not so much about the infrastructure or the rail as it largely is about the ops and the rules and things like that.
Yeah, I mean, it's why, pay by bank has struggled. And there's, not because there's lack of money behind it. And, even back to my days when I was on the Faster Payments Council, when you look at that, really where it falls down a little bit is for the merchant network. Now, there's definitely some fintechs and some large companies working on trying to build merchant rules, but those merchant rules protect the merchant and they protect the consumer. And and people need that confidence. So it's not always about necessarily going about like a different payment method. And I think, we're going to have tons of payment methods. And when crypto comes out, it's another way to make payments. It's not necessarily, everybody thinks it's another rail. It's not a rail. It's a dollar in another form. It's FX. So, but still with that, where there's struggles there, even when you get into that, is that there's not rules. And what's great about the rails, and everybody can say their cost and what they are. But what's great about the rails is that everybody knows the rules and everybody has to play by those rules. And so when a payment's accepted or not accepted, there's a rule base of why that happens. And that's important for the structure. And it really is it's why we can do a payment. It's why I can go to London and use my credit card, because that rule still applies when I'm on Visa, MasterCard, or Discover. And that's important to play by. And it also protects you as the bank in multiple ways. And I know, like in America, we're still complaining about like what we pay for payments. But if you travel internationally, we're almost half the rate of what they pay over there all the time, because they know the importance of the rails. They know the importance of trusted payments, because if you do any international business, you realize how many people get fraudulent transactions all the time and for large dollar amounts. And so, the rules are there to protect us, and those rails can do that. And one of the things that's hurting the marketplace for Visa and MasterCard and Discover is that because there's not enough issuing banks out there, that they can't get enough they can't get their cards in the wild. A lot of people are signing deals, but they can't get cards out there, and a lot of it's because there's not enough banks to do the underwriting. So, I know that sounds crazy and opportunistic for us, but there is. I mean, it's not the deals that are the problem; it's the number of banks that want to do issuing.
Yeah,
It's just like It's crazy. I feel the same way. And I mean, I know every banker's probably sitting in his office laughing at me right now, laughing at all of us like, yeah, right. And it's like, no, they're calling 100 miles an hour. And I think we all got mixed up, guys. Was the crazy neobank challenger startup thing, right? And it's not, it's sizable businesses like Walt said that have been around for 10, 15, 25 years that are trying to do something, right? They want to offer a debit card or a savings account, a checking account, things like that, right? Or some sort of lending facility. It's really an interesting time. Walt, you want to touch, and that touch whatever you want on that theme of outside of the card networks, what the future holds, but maybe hit a little stable coin, man. I know you're as much of a nerd there as I am on the crypto side, and
Yeah.
a bit of a skeptic, but an interested one. And I want
Well, I think let's look at the last week. Genius Act passed 3 weeks ago. People thought that wasn't going to happen in the first place. I think it's a good step in the right direction, and just purely from the standpoint of if it's going to break down barriers and walls to maybe allow businesses, whether that be banks or exchanges themselves or someone who wants to build their own coin, that might be a very affluential person in the United States, whoever that may be, you can go ahead and at least now start to look of, okay, this is where the business is, I can do with this business and where I can maybe potentially play, like the markets you can kind of go into, and allows banks to have some semblance of an understanding of the direction. I think clarity, will give a lot more guidance. And so I don't think that we're going to see too many big moves. I think there's an institution, I can't remember right now, but the Wyoming stable token, rather, that's come out right now. I think institutions are going to play around with that to have obviously financial backing from the securities and treasury bills that are going to be able to be applied towards that, which would be obviously fantastic. I don't know if every state and every bank needs to have their own token, but I think playing around in that space and not being flat-footed is extremely important. And I say flat-footed because if you look conventionally at kind of the banking industry, there's something banks are often flat-footed. They're like, hey, I see something coming by me and now I've got to go chase it. And how they chase it is by usually spending too much money on trying to kind of solve the issue and get back in the game when they've already maybe missed the boat. I think right now is get on the starting blocks and get ready to start jogging so you can kind of stay up with what's happening next.
I think it's important too, to everybody to realize that if you read all of this, it's still coming soon to a theater near you. We got 12 months left to figure out what the rules are. And everything about the rules that they propose to do over the next 12 months sound like safety. They sound a hell of a lot like what we already have, which makes you beg the question of, other than foreign exchange, what's the real purpose here? Now that's another question for another day. But the real thing that gets me in all this is that nowhere is anybody talking about free. Nobody's saying anything about this being free, guys. And if we're taking the system that we have because we don't like interchange, that's a piss poor reason to do it. If we're doing it because we can prevent fraud, then Coinbase can send me my money anytime they can find it. I'm a victim of it. So I'm not a believer that we're fraud free when we go.
Been mad about this for 3 years.
Do what?
He's not going to let this one go.
Hell no. They should have paid me off a long time ago.
Well, we were talking to one of my favorite bankers for sure, and one of the better innovators in banking this morning, and we were just talking about a lot of times what happens is banks, as we're getting back to what Walt said, they sit there flat-footed, and then the market comes by them running 100 miles an hour, and it's really hard to go from flat-footed to 100 miles an hour. And so what happens is the banks try to throw a lot of money toward it to play catch up. But, just like in the game of drinking, nobody wins at catch up. And so, you have to start investing now, if it's just in education, of where the market might go and where it's going to be and what it might look like. But, the do nothing approach, gets very expensive for you in time, because at some point you're going to have to pay the toll to be part of that. And this administration seems pretty hell-bent to make this a reality.
If you've ever been anywhere where, I don't care if you're gambling or what it is, and let's say you got lots of money in the bank and it's like your card got declined or whatever your issue is, and it's like, I've got plenty of money, I just can't get my hands on my money. It pisses you off at a special level, okay? Because it's my money. Now, if I go somewhere and I find that I want to do something that I can't do, but yet it should be done. So for example, a bank says, I'm going to work with a wealth management company. We're going to be able to allow our customers to invest in the stock market or whatever it is, set up 401ks, all kinds of neat things. But your customer has to move money back to your bank to be able to get it to where he can use it on a debit card to be able to do something. That's kind of a pain in the ass for him. He should be able to pick up his card and go take his card and buy something when he wants and decide whether it's his savings account, his checking account, or maybe he wants to sell some Tesla stock to buy that hot dog. That's his money. He should be able to do what he wants to do with it. When we move to the era of stablecoin and crypto, what we're doing is just like the wealth management system to the bank. We're bringing another system into the bank where we can take your dollars into this other room, into this other world. Now, what's going to happen here, if you hadn't seen this one coming, what we would call traditional wealth management in the stable crypto world and the banking world, debit and savings accounts, checking accounts, all of this is going to be intertwined, and I can spend money from any one of them because it's my money, and I can do with it what I want instantaneously. And it's up to the banks in the crypto world and the wealth management world to make that happen. So the wealth management world and the crypto world are really figuring that out pretty quick right now. And they're bringing down a thing to the banks saying, this is a stable coin. It's the bridge and the entry point. Is it going to change payments? I guarantee you it is. Is it going to do away with Visa? Probably not.
Well said. Just a couple minutes left, guys. Sorry, everybody, I couldn't get to all of. There's just so many good questions and lots of good shout outs to you guys as well, and folks chipping in. I want to hit one last one here that's kind of come up as a theme. So I've talked to you guys for quite a while, and you've been kind of giving me some really cool insights and data on buy now, pay later and stuff that we all don't see. And I've thought about it in my own use case that, man, there's been a number of times where it's just a short cash flow thing, right? It's not a huge deal. Or maybe it's I don't know, you want the thingy and it's $700 and it's like, well, shoot, I'll pay a couple $100 a month and forget about the damn thing, right? But for a cash flow reason, or you got something coming in next week, it's like, I don't really want to spend that today. You guys are seeing a lot of that, like surprising numbers that are actually maybe more like wealthy people, or you want to fill us in there in the last minute or two?
Yeah, well, wealthy people are really good at, getting interest-free stuff or getting along those lines. But one of the things that our data really showed is that, because we work, we specialize, a lot of the a lot of issuers out there work with debit cards, but we specialize on the credit side. And that's why we like working with banks so much, is because a lot of banks got burned in back in the day with credit, credit cards and stuff like that. But if you build and own the program and you stay to your loss parameters, you can build really good programs and have much higher NIMs than what you've even seen. Even though you might have a little bit higher loss ratio, you have such a better interest ratio that still is regulator friendly. I just something for you to think about. When it comes to buy now, pay later, the person who is usually a buy now, pay later is not a credit card person. So it's two different things. So one thing to note is that you're dealing with two different consumers. The other thing is, if you're lending somebody money for milk, that's probably not a good idea. If you're lending somebody for an electric bike, that's a little bit of a different user. So it's gets back to, making bad loans versus good loans. And I think sometimes it all gets watered down into all BNPL's bad when it's really just another fancy name for lending opportunity. And so at the end of the day, we've done a lot of research on it, and we like talking through it, and definitely do not underplay the risk in it, but the risk is not much different than traditional lending that from the consumer world.
Yeah, the
Well
juice is
said.
worth a squeeze as long as you can go ahead and apply pretty standard normal risk practices, right? You're not for community institutions, you're not doing maybe what is described as predatory lending and offering someone on their e-bike that they want to go buy 29.9% APR. You're going to do it at maybe 17.9. That keeps you friendly with the state or banking commission and regulators, right? OCC, and you can still make plenty of money on that with a consumer that has good credit, who wants to be able to go ahead and buy this thing. They're more than a qualified candidate. Make the money where you can. It's not that hard. It's not different. It's not that much different from a credit card product, but it is a different type of user, and they want this thing consistently. That's out there.
You bet. I appreciate everybody being here. Major thanks to our sponsors. I'm going to leave you with a final thought. Susan asked about Jamie Dimon's announcement on the paying for data access and what that does. Doesn't bother me a bit, worry me in the slightest. We're talking about the neobank land. That was a nice fight back on those guys. For everybody else that I think we were largely talking about today, where the opportunity is, commercial clients like Home Depot, the grocery store, that's not really an issue. But yeah, the challenger, the neobank, I think finally Jamie did something good for all the rest of us. I'm not too worried about the market or what it does, other than if I was playing in that space, and there'll probably be some implications there, but those are probably good ones for the rest of us, right?
Mhm.
And how we service our average everyday commercial clients, awesome, very, very good, and stops the bad guys from hurting us do that. So
Well, no doubt Susan would have a great question.
we will see you guys later. Thanks everybody for joining us. We'll catch you next time.
Appreciate
Thank you,
everyone.
everybody. Take
Thanks.
care.
Bye-bye.
Bye. Thanks for having us.